Right friends, welcome back to 6th capsule. This is the last one of 31st week and this is most important landmark legislation of goods and services tax. And before going into the details, let us have a snapshot on direct and indirect taxes. I have given here very few direct taxes and very few indirect taxes, and these are important direct and indirect taxes. Direct taxes are personal income tax, then corporation tax. Personal income tax is paid by the persons whoever are earning more than certain slab. Second one is corporation tax. Corporation tax is paid by the companies and corporations. Then indirect taxes are excise duty, that is on the manufactured goods, customs duty on the imported goods, then service tax, that is on the services. So these are all examples in a nutshell of direct taxes and indirect taxes, and here few points I would like to tell you. Out of all the direct taxes, corporation tax is maximum. In fact, out of all direct and indirect taxes, corporation tax constitutes the maximum of all as far as taxation is concerned. Second thing is the personal income tax is progressive in nature. What is progressive? Progressive in the sense, if the income increases, then what will happen? The tax rate will increase. That is progressive. The persons earning between 2.5 lakhs to 5 lakhs will pay 10%, and the persons earning more than 10 lakhs will pay 30% as income tax. So that is the meaning of progressive. So in our country, personal income tax is progressive in nature, and most important point is direct taxes constitute 40% of overall taxes to the central government. So direct taxes constitute 40% and indirect taxes constitute 60% to the central government. And another unfortunate aspect is just 4% pay personal income tax in this country, which is very low in comparison to the world standards. And if you look at indirect taxes, excise duty, customs duty, service tax, these are all regressive in nature. What is the meaning of regressive taxes? Because they will affect all the persons uniformly, right from poor person right up to the richest person. The implication will be the same, and all the persons irrespective of their social strata will be affected. That's why indirect taxes are called regressive in nature. And indirect taxes contribute 60% to overall taxes to the center. This is the area where India differs from some other countries. And unfortunate aspect is the contribution of direct taxes is reducing and the contribution of indirect taxes is increasing. That means the indirect taxes nowadays contribute more to the overall taxes, which is not the right thing, because of the reason all the people including poor people will be affected because of indirect taxes. Then for factual information, the central government overall tax collections in 2015-16 amounted to around 14.6 lakh crores of rupees. And another important aspect where the origin of this goods and services tax came to the forefront is Schedule 7 of the Constitution. As per Article 246 of the Constitution, under Schedule 7, then the legislative powers of taxation of the central government as well as the state governments is delineated. There are certain items which can be taxed by the center and certain items which are within the legislative purview of state governments. This is as per Schedule 7 of Article 246. Right. So now let us come back with this introduction to the indirect taxes in detail. What is the problem? What are the types of indirect taxes? Types of indirect taxes. First one is, I have listed the taxes of central government. Indirect taxes of central government I have listed on the left side. The indirect taxes of state governments I have listed on the right side. The first one is central excise duty. Central excise duty is on the manufactured products levied by the center. Then service tax, please look at this restaurant. If you are taking lunch in this restaurant, you have to pay service tax. So the service tax is levied on the services. Then basic customs duty on the goods imported, we have to pay basic customs duty. Then additional customs duty, this is special type of customs duty, just like countervailing duty. Similarly, we have special additional duty of customs. Then central sales tax, this is levied by the center and collected by the states. And at the same time, there are various central cesses and surcharges are there. So these are different types of indirect taxes collected by the center. And the state taxes, they are not uniform. Each and every state has got their own set of taxes. Value added tax replaced the sales tax and is imposed by the state governments. Then octroi is the tax imposed when goods are entering some metropolitan area or city, and this octroi with different names is in existence in several states. Example is Maharashtra and Gujarat. When goods are entering some metropolitan area, this octroi or local body tax is enforced. This is not in all the states. Very few states have got this octroi tax. Then if you look at entry tax, this is in existence in some states like West Bengal, Odisha, and when goods are entering one state, then entry tax is levied. And at checkposts, it is a common sight that trucks will be waited for substantial time in the name of checking it. So the waiting time of trucks at entry checkposts is quite common in this country. Some states have got entry tax, and some states impose purchase tax. Purchase tax is imposed, if I am not wrong, in Haryana and Punjab. Similarly, taxes on lotteries, state cesses and surcharges, luxury tax, entertainment tax, like that there are several taxes imposed by states, and the most important point is they are not uniform across the states. So the country is looking like one country with 29 systems. Right? So under these circumstances, what is the problem with these multiplicity of indirect taxes? As I have already told you, indirect taxes, some of them are collected by the center. There is no problem with the taxes collected by the center. But because of non-uniformity in laws and non-uniformity of taxes across various states, we are facing many problems. First one is input credit for intermediate stages of production is not perfect. What is meant by input credit? The final product will have various intermediate stages of production. When a car is finally manufactured, it has to procure so many components from several sources, and these components are taxed, and finally the car is also taxed, and this is leading to tax on tax. There is no input credit uniformly for the taxes paid in intermediate stages of production. So because of this reason, it is becoming tax on tax, and it is resulting in cascading of prices. The prices are being increased because of lack of input credit and because of lack of mechanism to enforce input credit at various intermediate stages of production. So this is leading to cascading of prices. Then because of this tax on tax and because of lack of mechanism to enforce input credit, overall tax on some components is coming to somewhere around 30% to 60%. And if you calculate the taxes on cars from the raw material stage, when finally the car is assembled, the overall tax is coming to around 30% to 60%. And because of multiplicity of taxes, entry taxes, purchase taxes, octroi duties, high corruption and harassment when trucks enter from one state to other state. Then higher logistics costs as the faster movement of trucks is hampered at state checkposts. The queuing of trucks at state checkposts is quite common in this country. and taxation at each and every stage in one form or the other is making the things too worse. And European Union is 28 countries with one single market, but India at present looks like one country with 29 different markets. There are 29 states in the country, and India looks like one country with 29 markets as far as the indirect taxes are concerned. Then, as the taxation is at multiple points, tax evasion is also quite common in this country. So, these are the present problems with the multiplicity of indirect taxes. Now, with goods and services tax, once it becomes a reality from 1st April 2017, it will subsume all the taxes. Please look into this slide. Whatever I have listed as indirect taxes, it will subsume all the taxes except basic customs duty, and for the time being, certain items like potable alcohol and petroleum products are kept out of the purview of goods and services tax. Right? And what are the advantages once goods and services tax is implemented from 1st April 2017? GDP will grow in the long run by additional 1% to 2%. It may not happen in short term of 2 to 3 years, but in the long run, GDP will definitely grow by 1 to 2% because of elimination of multiplicity of taxes and multiple entry points. Second one is the financial documentation will increase, and in turn, incidence of tax evasion will reduce. And the uniform, seamless market across the country, you can say it will become one common market. State borders will become irrelevant as far as business and commerce is concerned in this country, and it supports one nation, one tax theory, and it is a consumption based tax rather than production based. And it will subsume most of the indirect taxes, as I have already pointed out, and transportation of goods will become much cheaper because of lesser waiting time at checkposts, and logistics costs will reduce substantially, and manufactured goods will become cheaper. The car prices will come down substantially. This will lead to less corruption and low compliance cost. So, there are several advantages as far as this goods and services tax is considered. Then what is the procedure? This GST bill is now to be passed by 50% of the state legislatures. You may ask why state legislatures have to pass this? Because it amends the taxation powers of states. Whenever states' powers are amended, it has to be ratified by 50% of the state's legislatures. So, as it involves amendments to constitutional provisions involving the legislative powers of states, then 50% of the legislatures have to ratify this. Then President has to give assent. Then only it will become an act. And once 50% of the legislatures pass it, and once the President gives his assent, then the next step is GST Council is to be constituted, and please don't forget, GST Council will be headed by the Finance Minister, and here in GST Council 1/3 will be from central government, 2/3 will be from the states, and decisions can be made only with 3/4 majority. And once the GST Council is constituted, then a consensus with regard to GST laws is to be arrived. That means central GST, integrated GST, states GST framework is to be arrived at. And with regard to central GST, integrated GST, state GST, we will discuss in some other capsule after the GST Council is constituted. And subsequently, GST IT framework is to be commissioned, and training on GST IT systems is to be given. Then testing and integration of GST front end and back end with all the stakeholders is to be ensured. So, these are all the steps required to be done before commissioning it as per the scheduled date of 1st April 2017. So, lot more groundwork needs to be done before bringing it to the final conclusion on 1st April 2017. So, it is a historical step and it is the beginning of a new era in taxation, especially indirect taxation, and classic example of cooperative federalism in this country. So, I am concluding this GST at this juncture, and in future we will have one more module to look at GST Council and the issues associated with all other aspects before the actual implementation of GST takes place on 1st April 2017. Right friends, with this let us conclude the 6th and final module of 31st week. Have a nice day. Thank you.